Hey everyone, this is Anthony Brister, and this is the Wealth Planning Podcast with Brister Law. Today we've got a great guest, Andres Ledesma. Um, he's going to talk to us about financial planning, risk management, and some misconceptions about money today. Hey Andres, how are you doing?
Hey Anthony, I'm good, man. How are you? Thank you for having me.
I'm great. I can't complain. So, Andres, tell the audience a little bit about yourself. What do you do? What company do you have, and how do you help people?
Yeah, man. So my name's Andres Ledesma. I'm the founder and managing partner of Ledesma Capital Partners. We're a financial planning firm based out of Dallas, Texas, and East Texas. So I've got an office in Dallas and an office in Tyler. Essentially, what I do for people is I help them create a roadmap to get them from point A to point B when it comes to money. Um, the reason why I decided to get into the financial planning space was really honestly because of how I grew up, right? Being a first generation American, like many of us, and I define that a little bit different than other people do. What I mean by first gen Americans is, the first generation of Americans that are leading to wealth. And so growing up, my parents taught me about hard work. They came to this country. They gave us a better life. But what they didn't teach us about was about money. And growing up, I remember sitting, on the dinner table, helping them fill out their tax forms, right? Because we were going to meet the H&R Block lady the next day. And so, from an early age, I understood that money was important. Um, but one thing, again, that they didn't teach us about was about money. And so, coming into the career, I figured that it was a huge need for our community, and not just the Hispanic American community or the African American community or the Caucasian American, but it was really for everyone, right? Money is important. Money is a tool. Money is amoral. It doesn't care about your feelings. But if you are able to use money as a tool to get you again from point A to point B to your definition of financial success, then I think we're in the right spot. So I love helping people with money, and I love talking about money and how to help people be efficient with their dollars. And I wouldn't want to have it any other way.
Yeah, no. First off, you said a few different things there, but I want to commend you. Another East Texas boy. We're out here representing East Texas. So that's always great. I love seeing people from East Texas go out, do things. And, money is really a taboo topic to a lot of people. And
Mhm.
I myself didn't really get talked about money. It's kind of hush hush, it was private. I had to go out, learn the hard way about a
Yeah.
lot of different things, made some mistakes, still making some mistakes sometimes, right? That if I would have just been talked to about it, learned about it from that generation previously,
Mhm.
I probably could have avoided a lot of that and been a little bit further ahead. And that's kind of why I do this too. And we call this a wealth planning podcast. Is we're trying to create generational wealth, teach people about money, buzz some common myths, and really, like you said, give people a roadmap to be successful because everyone has the tools and capabilities to be successful. It's just whether they take action on it or, put things in the proper perspective for them. So that's great.
Absolutely.
Do you have any thoughts on that?
Yeah, I think one of the things that resonates a lot with me is the previous generation conversations that should be had. As I think about that, I think about, again, what my parents taught me and super blessed for what they did. But those conversations that were taboo a little bit, I wish I would have had those. And so now, as a father of two and a husband, and I know you're a husband as well, we have these conversations offline, but we want to talk about money to our kids and our spouses to be involved as well with our decisions. Um, what I mean by that is we need to bridge the gap between generations, and that gap, unfortunately, has to be us. We're that bridge that comes from our parents' generation to our kids' generation and everything further. And I think that's the importance about what we do, right? When it comes to tax and estate planning, when it comes to financial planning, is how do we build that gap to not just transfer that to the next generation, but transfer that and keep that generational wealth going for years to come. So that, I mean, it resonates. Everything that you're saying resonates completely to what I believe in and what I think. And quite frankly, honestly, it's what a lot of people also think. They just are either scared to say it because they don't know where to start, or they just simply don't know and are afraid to take that first step because of the uncertainty that they have because they are the first one. So it's a lot of psychology going on in the money world. And, I'll stop after this, but when I think about money, I also think about money is both logical and emotional, and we're human beings. We most of the decisions that we make are emotional, and as a planner, both on our ends of the spectrum, we have to take that into consideration that people make monetary decisions based off emotion rather than logic. So we also have to help people understand that there's a median and how can we use both to our advantage and not as a disadvantage.
Yeah, no, I agree completely. And mindset's something I've been working on personally right now. I've hired a business coach just for mindset. I think there's a lot of shame about money and fear. And I think that sometimes prevents people to talking to their children, their spouses, things like that. When, you know, you are where you are, there's no point of being shameful or scared or fearful of it. And getting someone on board, really helping, talking about it, can really help alleviate some of that fear. And fear is just an emotion. Shame, same thing, is just an emotion. At the end of the day, you might feel a little warm or a little knot in your stomach, but that's all it is.
Like I
So
do right now.
stop you.
This is
Shouldn't
my first
stop.
podcast, and definitely feel that a little bit of fear and emotion. But as you were saying before we were on, we were talking about like, hey, look, and it's just in your head. It's okay. We're gonna figure this out. But absolutely, I mean, I love that you said that you hired a coach because I also hired a coach a couple of months ago, and I think that should be a testament to the viewers is that hey, yeah, we know a little bit about what we do right in our prospective careers, but we don't know everything. And we sometimes need to lean on someone to guide us to the right direction. So I love that you have a coach. And shout out to my coach, Simon. He's an awesome dude. He's the founder of PCFO. So it stands for Personal Chief Financial Officers. And he's been a great help for me and to guide me to the right direction, both in my practice and in my life. But again, I think everyone needs advisors from any point to reach that level of success that defines not just who you are, but who you want to become.
Yeah, no, I agree. And I think that's a good segue into today's topic. We're going to talk about financial planning, risk management. So, Andres, in your opinion, what is financial planning and how does risk management fit into that?
Yeah, it's a great question. So, financial planning, as I said earlier, it's really building a roadmap to your definition of financial success. And what every roadmap is going to look completely different, and every financial plan should look different. There's no one size fits all, and that's a common misconception that happens in today's world. Is that they believe because someone else is doing it, then it's working for them, that it's going to work for them too, and that's not true. The reality is that circumstances change for everybody. Everybody comes from a different background, different cultural beliefs, and financial planning should be the same thing. Financial planning is not just about the numbers. Again, it's coming back to the emotional side of planning and making sure that we take care of what's important to us. That leads us into the conversation about risk management. Risk management, truthfully, the definition of it is analyzing and identifying the risks that could derail your financial plan or your financial dreams, goals, and aspirations and throw them away. Right. So when we think about financial planning and where risk management fits in, is talking about, honestly, the boring stuff. People don't want to talk about the boring stuff when they think about financial planning. When they do think about financial planning, they think about retirement. They think about investing in the next stock, or just investing their money in real estate, whatever it may be. But they forget about the foundational pieces. And in my philosophy, I believe that there's three areas of life that we walk our clients through. Area number one is risk management. Again, risk management being the boring stuff, and we'll get into that. The second part is the wealth accumulation phase of planning. And the last phase of planning is the distribution and preservation of wealth. Coming back to the risk management is really talking about things like what happens if, God forbid, we were diagnosed with a life threatening disease like cancer. Or what happens if we were to lose our income due to an injury that happened while we were playing basketball. Um, some other extreme cases is what happens if, or what does life look like to your family if, God forbid, you stepped out of the building today and you were to get hit by a bus, right? So these are all things that people don't like to think about. And to be quite honest, it's okay, because that means that you're normal, right? I don't think anybody wakes up in the morning and says, "Oh my God, I wonder what can happen today that will derail my financial future," right? But most people do think about is, and as husbands, as parents, and wives, and people who are viewing this, what we do think about in the mornings is, okay, what are we going to do today to better ourselves? um, what can we do today that aligns with our values? But again, when it comes to risk management, I think people should also think about and take some time to sit down and really just ask this one question: what does life look like when things go wrong? Right. So we can talk a little bit about products and ideas and all those things, but the reality is that those are just products and tools that help us build a risk management. Some of those things are like life insurance, right? What
Yeah.
happens if, God forbid, you passed away prematurely? Especially if you have dependents, especially if you have things that you're going to accomplish, or a business. Second thing that most advisors do not talk about is, how do we protect your income? And we can talk a little bit about that as well, and what that looks like. Another very easy foundational piece for risk management is also the conversation around, do we have enough cash reserves? Do we have an emergency fund? Things break every other month. It feels like this past month we had to get new tires on the car. We had to get a new battery, and to be quite honest, we were lucky that we were prepared for that, because we did have an emergency fund. But I was talking to my wife and I was thinking, what happens if we didn't have it? Right? We have to run things through our credit card, and which leads to the next foundational piece as well, is to make sure that we have debt under control.
Yep.
Um, that, from
Um,
the financial planning perspective, is what I believe in. People should consider when the risk management conversation.
yeah, I find it interesting that you start out with risk management. Most financial advisors, I feel like, are talking about rate of return, assets under
Alpha.
management, right? I think the same thing for me too. I do work in tax and estate planning, and nobody wants to do their estate plan. No
Mhm.
one likes thinking about, you said it, what does life look like when things go wrong, or if something happens to me. And people push that off when really that should be a foundational piece. So, with your process, you start with risk management. What kind of things do you talk about? You mentioned life insurance, protecting your income. How do you protect your income?
Yeah, yeah, those are great questions. So, the biggest thing that one of the biggest risks that people think that they have when it comes to financial planning is death. Um, and I actually, don't think that's necessarily true. Yes, people pass away, and yes, we'll talk about the importance of having life insurance. But there's one thing that's driving all of this. That's the quarterback of our financial, not just our financial life, but our life in general. And that's our income, right? There's an analogy that I like to use, or it's not really an analogy, but I walk through my clients through this. Most of us, whether it be that you begin a business or that you go to school, I ask the question to this, and maybe we could role play a little bit, Anthony. I would tell you, Anthony, why did you go to school? Or why did you go to law school?
I went to law school really to earn a better income. I thought that was a way to do it. Uh, I went because also I saw these big corporations, rich people using the tax code, and I said, "Hey, if they can do that, I'm going to learn how to do it and help people like me use the tax code um, in order to be successful and create wealth."
Absolutely. And I think everybody goes to school in your prospective careers, whether it be a doctor, nursing, marketing, engineering. And I know I've missed a lot, but you go to school to essentially get a degree or get a certification to earn a better income for a better livelihood. Anthony, would you say that going to school and the cost of school was a huge investment, a huge sacrifice, a lot of blood, sweat, and tears? Would that say that's a good assessment, or am I missing the ball a little bit?
Yeah, probably a little bit more sweat and tears from law school too, but uh, yeah, and it was a risk. A lot of people told me, "Hey, you're not gonna you're gonna go into debt and not be able to make this money from law school." But I did believe that it was a good investment. It was a lot of work too,
Mhm.
um, and ultimately, I do think that it has paid off.
Yeah. Yeah. And to be honest, a lot of that blood, sweat, and tears and that come with that, a lot of though it also comes with is a lot of investing of money and investments, and not just investments, but getting out student loans just to get through school for the most traditional student. So now that we know that it was a lot of sacrifice, and we went through this sacrifice, these almost some days where it was tough to get through school, but we know we wanted to do it because we wanted to make good money. We wanted to give our family, and in this case, your future wife while you were in school, a better life, and your kids, all for a better income for the most part. So, Anthony, why are we not protecting it?
Yeah,
And
people.
and I know obviously you are protecting it, but in that role play, I ask that question to clients: is why are you not protecting it? Would you say that that's an important part, if not the most important part of your plan? And when we talk about protecting our income, it's really the conversation around disability income insurance. And we could talk a little bit about those details and what that looks like. But just in high level philosophy, is the reason why we want to protect our income is so that we don't have to go and take from something else. You know, a lot of scenarios that play out and a lot of misconceptions and myths is that, hey, I have a financial plan or I've got a retirement plan through work. I've got a lot of benefits through work. I'm okay. I don't think I need financial planning. And then I asked the question of, well, has your HR department walked you through what it looks like if, God forbid, you can't go to work because of health reasons? And like, well, I know I have this thing that's long term disability. I said, well, yeah, that's great to have. I tell all of my clients you need to take advantage of what your work provides for you. I said, but do you know what actually happens? And what most people don't know is that what happens when you do have to go on claim for a long term disability away from work, your work actually terminates your employment before they can even start filing a claim for the long term disability for your employer benefit. That employer benefit usually only protects about 50% of your income. Now, a lot of times I ask the question to a lot of young professionals or people who are in their 30s or 40s, and I ask, hey, could you live off of 50% of your income? Most of them say, well, if I live very frugally and I can do all this, I think I can. And I said, yeah, you probably could. But this benefit only lasts for most often 2 years. After 2 years, what's the plan? Oh, well, I had no idea that it only lasted 2 years. I said, well, this is what usually happens. And what usually happens is that they have to start taking from the other investments like their 401ks, their Roth IRAs, their, let's say, real estate investments in this case, their business. If you're a business owner, you can, and you're a key employee to your business is not going to succeed. On top of that, you have all the medical bills that come in. So what we like to do is come in and protect our income privately to try to cover the other remaining 50 or 60% that's left over.
Yep.
So that is one piece that we talk about that not a lot of advisors talk about is protecting their income.
Yep. I've heard it a different way, and I think this was Nelson Nash, but um, think about it as a machine. If you had a machine that was making a $500,000 every single year, um, how much would you insure that for? Would you only insure it for 50% of the cost? Probably not, right? If you could choose, you would want that full amount.
Yeah.
Well, we're our own machines and we're producing that income. So I don't want to live 50% of the lifestyle. I still want to go, on trips, enjoy my
Yeah.
life, even if, I might be hurt or unable to work. Um, I don't want to have a worse lifestyle. So I think,
Yeah.
that insurance, and I believe we're talking about disability
Yeah.
insurance, right?
Yeah.
Uh, why wouldn't you protect the one thing that is driving income to
It's
you?
the quarterback of your financial life, right? And that's just, again, just one product, one tool in the risk management. And the next one we talk about, and it's really straightforward, and it's just life insurance. Now, there's different kinds of life insurances out there with different uses, but let's just talk about life insurance in its purest form. And the definition when we talk about insurance in general, whether it be disability insurance or life insurance or car insurance or homeowners insurance. The definition of insurance is a transfer of risk away from you to someone else for what's called a premium, right? And that's where the word premium comes from. It's pennies on the dollar. You're paying for a coverage that's pennies on the dollars in case you needed to use it. And so when we talk about life insurance, I think it's again very straightforward. Is once we talk about protecting our income, and then again the boring stuff of planning, but it's also the most serious because it's true. It's what does life look like if God forbid you didn't make it home tonight? And I know we talk about this often, but what does life look like in this case for our wives? Do they have to change their lifestyle because we didn't have enough life insurance?
Mhm.
Or kids, and if they go to private school, they have to now go to public school. There's nothing wrong with that. I mean, I grew up in public school education,
Correct.
but if your kids are doing extracurricular stuff that you're trying to give them a better life, what does life look like if the main breadwinner does not make you home tonight?
Yeah,
And
and I
oftentimes I
mean,
ask that question to clients, and I just sit back and say, what does life look like?
yeah, for me, it's really important. My mother passed away when I was 10. It happens.
Hmm.
She didn't have any life insurance, really, or any assets whatsoever. Luckily, my grandparents took us in, and were able to provide us a good life. But, it could have looked very differently. And it is for
Hmm.
a lot of people who don't project themselves. I know I have my opinion about how much life insurance um, I want, and I think people should have. For me, I say give me as much as I can, because again, if I got that machine making 500,000, I want to insure it as much as
Yeah.
possible, right? What's your thought on that? How much life insurance do people need?
Yeah.
And is it just a percentage number, or is it kind of a floating rate?
There's a couple of different approaches to this, and I like to take all of them because it really depends on who I'm sitting in front of. But one analogy that I like to use is your life, when it comes to your life insurance needs, is like an upside down U or a hill. You're at the bottom of the hill, you're young, you don't really need insurance, but you've got student loans. But again, there's not a lot of people depending on you. So maybe you don't need a lot of insurance, if any. We'll talk a little bit about some common misconceptions around needing insurance when you're young. But just in theory, when you're younger, you don't need a lot of insurance. The second phase of planning is like, oh, okay, I graduated college, I'm married, I bought my first home. The need for insurance, kind of starts going up that hill. Then we get to a little bit of the top of that hill. That's when you need the most insurance. The time where you need the most insurance is when you've got kids, when you've got a business, when you've got, again, your spouse that still lives. And After you get to the top of the hill starts coming back down. Where hey, the kids start going out to school, the house is paid off, we're leading into retirement, all these things. That, in theory, is one way where hey, insurance needs change over time. Now let's go back to the needs analysis. Well, how much insurance do I need? What I walk my clients through, and there's a couple of things. Some people say, hey, multiply your income times 20. I think that's just a very vague number. That just kind of gives you an idea of what you need. I like to be more personalized with how much insurance you need. And most of the time, we're talking really about term insurance. Yeah, permanent insurance can make sense for a lot of the wealthier individuals who need that permanent death benefit. But in this case, we're talking really about term insurance. I like to walk my clients through a mnemonic. That mnemonic is L-I-F-E, life. Each letter in that mnemonic means something. The letter L stands for liabilities, including your mortgage. So anything that we owe money on, that's going to be a line item there. We add up all our liabilities and debts. That's a number. Then we've got the letter I, income supplementation. And what I told my clients is that this number right here is going to be the biggest portion of your life insurance. Income supplementation is just a fancy word of saying, hey, how much of my income, if all of it or some of it, do I want to still keep coming in the door if, God forbid, I did pass away? So let's say you make $100,000 a year and you've got a 5-year-old kid. The youngest kid is 5, and maybe they've got 13 more years before they turn 18. A lot of the times, parents say, "Well, I would really like my income, or at least most of it, to continue to come till the last child is out of the house." So, or some people, when they already don't have kids, they say, "Hey, well, I really want my spouse to have 5, 10, 20 years of my income continue to coming, or I want to retire her." Whatever that is, that number is completely dictated by you. I guide you in some ideas, but that number is really just a multiple of your income. Let's just say, for example, in this case, your debts are 400,000 for easy math. You make $100,000 a year. You want to give your spouse and your family 10 years of your income continue to come in. So you just multiply 100,000 times 10. That's $1,000,000. So your total life insurance needs as of now is 1.4 million. Then we go to letter F. Letter F is pretty straightforward. It's just final expenses, funeral cost, or anything that we absolutely need that needs to be finalized. That could include funeral costs. That could include business interests or all these other things that could come in. But let's just keep it simple. Let's talk about a funeral. A funeral right now will probably cost you around $20,000, maybe $30,000 in the future. So we just like to have a wiggle room there. You're paying cents for $30,000 of insurance in the long span. So we just like to add $30,000 there. Then let's say you've got the letter E. The letter E stands for everything else. Everything else includes education for kids, charitable givings for people that are charitable inclined, or leaving money behind for parents or for siblings or for whoever, right? It literally stands for everything else. Let's say, to make the number easy, you want to leave behind money for your kids for college. Let's say college is going to cost $100,000 for 2 years for 2 kids. So that's $200,000 of insurance. And you want to leave $50,000 to the Ronald McDonald charity. That leaves you with your final needs. And so when you add it all up, I'm going to estimate here, but you're going to need about, let's call it $1.6 million to $1.7 million of insurance for this specific scenario. That is a very detailed version of how much insurance you need. The reason why I walk through clients for that is saying, hey, this is what you need. Is this what you want? And when we're thinking about maybe being on a budget, we work with many carriers and we talk about, hey, which one's the best fit? Who's the best cost to be able to accomplish that life insurance need, so that if, God forbid, we did pass away, all of those things are taken care of and your family's on a clean slate and they can worry about grieving accordingly.
Yeah, no, I really like that life and the way you break that down. Um, and I think, it isn't looking at something in a vacuum. I think just throwing out an arbitrary number like 20
Yeah.
times your income,
Yeah.
that's different for everybody, and everyone wants different things.
Mhm.
For me, leaving a legacy is very important. And creating generational wealth as well, very important for me. it's kind of hard to create generational wealth if I leave my family with a bunch of debts and final expenses.
Yeah, 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 and that's the biggest thing that it's really unforeseen. Unfortunately, people do pass away, right? We don't have a magic calendar that tells us on this day at this time we're going to pass away. So by then we need to have life insurance. There's so many variables that go into needing life insurance, and a lot of misconceptions as well. But the reality is that I believe that everyone should have some type of life insurance, whether it be 20,000, 2 million, 200 million, whatever it is, whatever your number is. I believe that you should have some type of insurance. That way you don't leave this world in a mess for your family, and they're able to again grieve your departure the right way.
Yeah, no, I agree completely. Andres, can you break down that mnemonic again? Life and
Yeah,
why, what you use that for life insurance and how that
yeah,
comes up?
yeah. So the mnemonic life stands for four different things: L.I.F.E, liabilities, income supplementation, final expenses, and everything else. We like to use this mnemonic to give our clients a specialized, customized, their number needs of analysis for their life insurance needs. So then, one, they don't have to over insure themselves if they don't want. Certainly can if they want to, but definitely don't want to under insure, and to protect them and to protect their overall financial plan. And if God forbid they did pass away.
Yeah, no, that's excellent. And, I would say personally, I don't think that you can overinsure because the insurance company is going to stop you off for what they think your life value is, and
Yeah,
they've got that number for you. But
yeah,
maybe budget wise, it might not make sense for everybody. And
Mhm.
again, taking that analysis, you can really come up with the number that fits for everyone else. So I think that's great there. As far as risk management goes, is there anything else that you think is very important for us to talk about?
Yeah, yeah. I think there's a lot of things that goes into risk management, and one we're going to lean on you for some of it because they're probably the most important pieces come from working with the tax and estate planning attorney, working in collaboration with their advisor. But there's two things that I don't want people to forget about, and they're really straightforward. It's just number one, making sure you have control on your debt. Debt is the biggest, honestly, pitfall that people fall into that can cause financial distress in someone's life. So making
Yeah.
sure that you have interest. Now, I'm not saying that debt is bad. I'm not saying, and maybe this will be a hot take about from Dave Ramsey, but I don't believe that debt is bad. Debt is only bad when you use it in bad ways. Again, money is amoral. Money has no feelings. It's only the way that you use this tool. And we love leverage, and we'll talk about that in our future conversations, right? We love leverage. If you can use someone else's dollar, why not use it, right? But again, when we're talking about this kind of debt and risk management, it's just making sure that you have control over it. That that could be the easiest way that someone can take away from other things in planning that you want to accomplish. And the last but not least is having an adequate amount of an emergency fund. There's a couple of sweet spots that really you can't go wrong with. The biggest thing that I tell clients is, okay, if you're, let's say, like myself, if I'm a working spouse, or I'm the breadwinner of the house, and my wife stays at home taking care of the kiddos, we probably need to have a good cushion just in case, because with one income, there's a lot of things that could go wrong. Again, passing away, uh, having to pay some immediate things, the debt to having control, or honestly, what happens if I can't wake up in the morning and go to work because something hurts? So we like to have around 6 months of living expenses in an emergency fund when you have one spouse working. When you have both spouses working in a household, a good number is about 3 months, because now you've got two household incomes that are coming into play. That if, God forbid, one of them lost their income, we still got something else coming in. And if we've done planning accordingly, we've got disability insurance, or we've got maybe, God forbid, someone passed away, life insurance, and we have that emergency fund. The second one is if you own a business, if you're a business owner, and you and I could probably relate to this. Business,
Yeah.
1 month, we could have a great month. another month not so great, and then have maybe a couple of months that are not so great, and then we have boom, a huge month during the year. So what I like to see my business owners in is at least a year of cash reserves or emergency fund. That case, they have working capital. In this case, if you own a restaurant or if you're owning a car dealership, whatever it may be, you've got money to use to buy inventory to keep paying employees. That way, you don't have to go out and pull a line of credit debt out if you don't need to. So that was one thing as well. Those two things is having an emergency fund and having debt under control. Now,
Yeah.
I'll turn to you. That being said, Anthony, what are some things from your perspective that we need to talk about having in that risk management place, and why?
Yeah, and before I go that, I just want to hit on some of the points you said too. The debt, that is a huge thing to get control of. And when we're talking about wealth planning, compound interest really comes into play for us. And it can be either working for you or
Mhm.
against you. Credit
Yep.
card debt,
Yep.
sometimes student loan debt, if it's you got too much out, maybe for a profession that you chose, that compound interest can really start adding up and working against you. But on the flip side, compound interest could be working for you and continue going, and it's how you use that tool. And
Mhm.
then, secondly, the liquidity and having a savings that emergencies come up, bad things happen.
Mhm.
Definitely good to have an emergency fund and just cash there gives you peace of mind. And for business owners, my business owners, most of the reason people fell, especially in the first couple of years, is lack of liquidity. And if they would have had that liquidity, it might not have been a bad business idea. Now, certainly there are some bad business ideas. Uh, but most of the time, if you had some excess liquidity and some savings, you would have been able to push through some of those bad months and then get to those good months that do come, because
Yep.
I look, business comes in waves. It's never a
Mhm.
straight line going up or equal. You have those waves. So you need to be able to fill in those gaps. And so having that liquidity is great.
Yeah.
Uh, for me, risk management, the way I look at it, really, and what we do, asset protection. So something happens, either you do something stupid, an employee does something stupid, or not even stupid, but you're negligent for something. Protecting your assets from that one bad act and keeping someone from being able to take everything away from you that you work so hard for.
Mhm.
The next one, estate planning. Again, that goes into risk management. Something bad happens, one thing that's guaranteed for all of us, and really two things that I deal with: death and taxes. We're all going to die at some point, and we've always got that silent partner, Uncle Sam, wanting a piece of our back pocket there. So having an estate plan, if you don't have one, guess what? You actually do have one. The state decides where your assets are going and how it's distributed. So personally, I think everyone should make an estate plan once you're an adult, and then also have some protections if you don't die, but you become incapacitated for whatever reason. And that's certain real risk there. And then lastly, we talked about taxes too. Risk management and taxes. Taxes are generally the biggest expense most people have throughout their lifetime. And that can really make a huge impact on your bottom line. And when we're talking about wealth building, the more money that you can save, put in your pocket, the more you're going to be able to put out and get to work for you. So, having a tax plan, having a tax advisor, having that coach in your corner, and maybe multiple people right in your corner, all working together, going forward and making sure, we're being as tax efficient as possible so that we can get that wealth accumulation going for us.
Yeah. Yeah. I think it's so important to protect yourself from the unforeseen. And I think that's the definition of risk management is right. How do we analyze how do we understand the risks that could derail our financial plan? And again, for each one of us, it's completely different from the other. but the definition still stands true. It's all about what does life look like if God forbid something were to happen to me or my spouse or my business or something that you had no control over. I think that's such an important thing to realize in the financial planning world.
Yeah, certainly so. Well, we've spent almost 40 minutes here just talking about risk management. Guys, I think we're probably gonna have to split this up into a couple different episodes. Um, one being we talked about risk management this time. Next time maybe we talk about wealth accumulation, the sexy piece of financial planning. And then either have a different episode on distribution or combine that with the wealth planning or wealth accumulation piece.
Yeah,
Um,
yeah, absolutely. I think there's so much that comes to financial planning. I think that should give it some light into what financial planning is. It's not just a one-time thing. Financial planning is fluid. It's meant to change over time. Things change, you change, values change. Hopefully not too much, or maybe hopefully for the better, right? Um, but the reality is that financial planning is not just about you sit down once, you do a budget sheet once, you buy life insurance, and you leave it alone. It's an ongoing process. As you gain more wealth, your risk management plan changes, your wealth accumulation strategies, your asset allocation. That's what that's honestly why financial planning is the most important topic, in my opinion, that people should have. The earlier, the better.
yeah, and I agree with you. Personally, I recommend meeting at least once a year with an advisor. But for my clients, I offer advisory services, and we have people who meet monthly with me or quarterly, even. And we're going over that risk management plan, the tax plan, the estate planning, looking at their financial life because things change. And if you're not planning, you're probably planning to fail. Uh,
Yeah,
so
and
it's good to
if
have
I could,
that.
if I could add something to that, I love that you brought that up about the lack of planning is planning to fail. Here's the truth: a lot of people have a lot of advisors around them that are going to make them successful. Their banker, their accountant, their lawyer, their financial advisor. And what's funny is in that, and I'm gonna get a little biblical here because just by the way, fun fact, I am a theology major, not necessarily by choice. In a way, I just happened to graduate from Lutheran University, and a part of my interdisciplinary studies degree was theology. But Proverbs 15:22 says, "Plans fail for lack of counsel, but with many advisors they succeed." I mean, come on, right? It's just said. It's there for us to take in, from the greatest book that was ever written. There's many books, right? But this book is probably really special in a lot of people's lives. And again, whether you're a Christian or whatever faith you are, there's nothing that says you need to follow this. But just in the lack of the theory and the high level thinking, I think that yeah, with many advisors, you're going to have so many people in your corner that are leading you to the right way, and that leads me to talking about how everyone should work in collaboration, not working against you, but for you in a way like you and I work together.
Yep, and that's one big thing I harp on all the time, and the reason why I just don't have the law firm. I have the tax preparation business as well, and I work with advisors like yourself. I always were running into we'd come up with a great plan, save a lot of money on taxes, and then I have people saying, "No, you can't do that." And most people have five different people, advisor, accountant, lawyer, banker, etc. They're all have conflicting interests most of the time, and they're trying to pull you in five different ways. What you really
Yeah.
need is a team that's pushing you forward, and they need to be able to collaborate, look out,
Mm,
have a fiduciary responsibility, and look out for your best interests and push forward.
yeah. Absolutely. Absolutely agree.
So, Andres, any last things you want to leave us for today?
Yeah. I think leading into this, and we talked about about this, of how we're going to integrate all of this. But I want to kind of give people a glimpse of what we're going to talk about next in
Yeah.
the next phase of planning. Um, Here's one thing: everything that you know about retirement planning is wrong, and I'll just leave it at that. We'll leave it to the next podcast to talk a little bit about what it looks like. It's a little bit of a hot take, but bear with me, guys. There's so many things that go into retirement income planning that you were taught, not just from school, because to be honest, they don't teach us anything in school about it, but the things that you've been listening to, the radio that you listen to, the math is a math, and I can tell you the way that you think about retirement income planning is wrong. And I teach my clients the right way to think about, and how are we going to utilize all these tools that we work so hard for in our advantage for the better future that we're going to have in retirement. So hopefully that gets people excited for the next podcast.
Yeah, no, that is a hot take and kind of scary if you think about it, because that's a big deal for a lot of people. And, I do think a lot of people get retirement planning wrong and they're not doing enough. So,
Mm.
can't wait for that next episode. Andres, what's the best way for people to reach out to you? I'll put your info in the show notes, but how can people reach out to you? And kind of what's the best way to do that?
Yeah, yeah. As we were talking about earlier, we're close to wrapping up our website for our firm. We're trying to get a little bit of the minute details taken care of. But what most people can reach me through is through email. My email is Andres, so Andres at ledesmacapital.com. We'll probably leave that in the description below. They are going to also reach out to me through Facebook. I've got my business page there. They can also message me through there, and we can reach out and I won't put my phone number out there through the world to see, but definitely all you have to do is ask for my cell phone through Anthony or through whoever, and be more than happy to hop on a call. And a lot of the times for the first calls, for those people who do want to have a conversation of what does financial planning look like for them, and what it all comes with, we offer introductory calls that are complimentary. Really just get to know you, get to know us, and really to see if, number one, you like us enough to work with us. But for the most part, yeah, those are some ways where people can reach me.
Awesome. Yeah, and I'll be sure to put those in the show notes. Um, just to recap, guys, risk management is the foundation of building financial wealth. And if you don't have that foundation in place and something bad happens, your financial plan can be start tumbling down and really get destroyed by not having that proper base in place. So risk management is a key to having a great financial plan. And there's a lot of different pieces to that. Guys, thank you for tuning in. As always, go to bristertaxlaw.com if you want to reach out, schedule a discovery call. Go to Andres's website once he gets that up, or email him, reach out to him if you got any questions. And don't forget to like, follow, subscribe, just depending on which social media you're watching this on. And if you got any questions, please comment below. Thanks, guys.
Thanks, Anthony.